Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, this show is brought to you by Kraken Pro. Kraken Pro sports all sorts of instruments, which is a very compelling pitch, but realistically, you can trade X stocks, you can trade futures, you can trade margin, you can trade spot on there if you want. There are earn products, they recently added options, and there's also even prop if you care about that type of stuff. So all sorts of bits and pieces always growing on the Kraken Pro side, and I guess more usefully, I'm in a few of the channels where they take product feedback extremely seriously, especially there's a current big push around UI UX. So if there's any part of the Kraken Pro terminal or website that makes you want to harm yourself, just call it out in the description or in the comments rather, and we'll get that forwarded and try to make it a smoother and more likable trading experience. But yeah, there's a bunch of stuff there. A lot of the good stuff is actually boring stuff, like their regulatory stack and all the licenses they have, etc. But Kraken overall, pro and non-pro as well, I think is a pretty decent. There's an endorsement aid on pretty decent venue for all of your crypto trading needs. We know from past experience that having all your crypto risk centralized at one exchange is generally a bad idea. So if you haven't added Kraken to your stack, please consider doing so, and you can do so via the link in the description as well. Cool. So Don, a lot has happened since last week. And by that, I mean BTC is at exactly the same fucking level, slightly lower than it was the last time we recorded this show. The 65.6 level remains intact, and it's a pretty much an inside week as well, I'm pretty sure. Yes, it is. I mean, if you want a symptom of volatility, death, or compression, I think is the technical term. It is something like this, where we've now had basically two inside weeks in a row, right?
Yep.
This week's price action is within last week's price action is within the previous week's. This is just pure sideways action on the BTC side, and ETH doesn't look too dissimilar. It's another inside week within an inside week on ETH, and similarly, it is at this underside, 1.92k level that it hasn't managed to breach yet. Nonetheless, that was enough for you to start buying Ethereum as well as goading your comments section as you've been doing for 9 years and still not bored of it somehow. So do you want to walk us through, the reasonable framing might be, well, volatility is so low and nothing's changed inside week. What was the specific switch or trigger that, at the very least on the ETH side, if not others, made you put some risk on?
No, I mean, I've been wanting to for a while, and I've been like, yeah, I'm too lazy. Nothing's happening anyway. So it's just like, okay, let me actually do it now. And I just sat down and did it. Like I talked about it on stream that I liked it. Was exactly the same price as it is right now, actually. And I was like, oh, like if I can talk about how much I like it, might as well just start buying the thing rather than just sitting there waiting for it to go either way. Because originally I would want it, like I wanted to buy 1 point, like that 1.710 ish cluster that is in there on the weekly time frame. That's the 8th of June weekly candle, the green candle, before the last down move. Wanted to buy that green cluster there, but yeah, I was like, I've waited long enough. It took like 6 months or so, not 6 months, 6 weeks, and didn't happen. So I was like, okay, whatever. I'll just bite the bullet, buy a little bit higher, and then I'm ready to buy more if it goes lower. So I'm by by no means like all in this thing. I was like, I want to have some.
And you mentioned if it goes down to the cluster, that's still valid for you. Let's look at both the other extremes of the trade. Where are you wrong, and at what point are you going to do your last week therapy move of, okay, enough is enough. I'm going to start closing this shit, 50%
Um,
before my target.
so I generally like giving it spot and given it's not too much. Like I actually like I wouldn't necessarily even call it a trade. It's just like I want to have some. I can like I think it is invalidated. Like if we close the monthly below 1.5, at that point I would probably get to rebuy at 1K. So I try to kind of capture that. but otherwise I'm just like, I'll see where it goes, see what happens. So it's not necessarily like a very active trade per se. It's just me getting something I wanted to have for a while now.
And in terms of, given it's not a trade, are there any interesting execution nuances worth knowing? Do you just fucking clip in? Do you limit chase? Do you use a TLOP? Do
Yeah,
you
I just
scale?
no, yeah, I just buy slowly, like like I started buying, and I'll just keep buying until I'm happy. There's not really that much to it. Like I just slowly buy, like have it open, and then just buy every other hour or so whenever I feel like it. And
Very,
then
very
go.
sophisticated. Look
Yeah,
forward to your Jane Street
as
interview.
yeah, as you would expect from someone that is way too old for this market at this point. I'm just like, okay, whatever. I'll take what is there, and then if I get filled, cool. If I have to like buy something, like into something, fair enough. And then just go from there. So it's like it's basically like whatever. There's when you zoom out that much and you're on the monthly time frame and the market moves like $1 per day, it like does it really matter? To me, it doesn't really. Like the perfect execution in in this market doesn't really matter too much, in my opinion. And this is something that people will do when we don't move anymore. They zoom in a lot, and then they feel like 1% price movements are huge. But we're talking crypto here, right? Like I've had a bunch of people kind of like at me on Twitter when ETH moved in the last day or two. Like it just went up a little and then went back down again, and it's literally just like a percent, if not like even less than that. Um, and I'm like, what the fuck are you guys doing? Like I kind of I feel like people are too zoomed in. It kind of shows how leveraged people get to. Like whenever the market moves this little, people are very ready to throw on leverage, and then they get used to it, and then it's like they're trading on like whatever 20x leverage, and then they get one candle to the face either way, and they're liquidated. And I think that's kind of the regime we are in right now. It's very choppy. It doesn't really move any. So yeah, gotta take that into account when you're looking at charts. Like, don't get too lost in the sauce. These 1%, not even 1% movements look ginormous on the hourly time frame, and they're actually just like it's literally just barely a move in
Yeah,
the
I
grand scheme
think
of things.
if you're getting super excited, the second inside week in a row, you're kind of snitching on yourself.
Yep.
In terms of either the risk you're taking or the leverage you're using as a function of the massive position sizes you're putting on, so on and so forth. That's why I think metrics like ATR or looking at sort of realized volatility or even like a moving average type of thing, some sort of volatility proxy is very useful to have in your trading system, even if you don't use it to explicitly make decisions, just to know that you're not going insane. And before you do anything stupid, it's a helpful bit of context to sort of understand what reasonable expectations should I have for this trade in this regime, and is it worth it, right? You kind of look at the
Yeah.
daily range, you can look at ATR and be like, okay, best case scenario, I catch a 1.5% move in this current regime or something as a placeholder example. I think then the question is, after trading costs, is that actually worth it? And how big does my position have to be to make it worth it? And oftentimes that will kind of filter out the garbage trades for you. So, this is sort of touching on last week's theme of trading frameworks and principles as opposed to just slapping on the first rectangle that you see and going from there. That sort of practice of giving the market some context from a volatility perspective can automatically act as a useful trade filter. Whereas, I've done this in the past, I'm sure you have as well, where you kind of assume, you sort of don't think about volatility in that sense. You just look at the time frame, and if it doesn't look good enough, you look at another time frame. And in reality, sometimes it's just like, well, these conditions, there's nothing here for me, or even the best case is not that attractive, so I'm going to go do something else.
Yeah, trading wise, this is just garbage.
Yeah.
You did ask for a target, and I mean, this is always like whenever I give targets for like the higher time frame moves, it sounds ludicrous, but I'm kind of like looking for 4K. And if we get there and it looks bullish, I'll hold on to it. If we get there and I kind of feel like we're running out of steam, I'll get rid of it. And realistically, I might sell before, but that's kind of like, I feel like that's not even that much of a stretch if we actually do get some upside. If we don't, obviously the downside is like that's the thing with these high time frame moves. They're usually large, right? So either we get some upside and we properly reverse this thing like to 3.8 for 3.9 4K, or we just like the bottom falls out and we go to 1K. I think both of these are possible. Like if Bitcoin rugs, I think like 1K is going to be like probably one of the better buys you can have. Just generally, like that's going to be a long time frame buy. That seems really good to me, but I'm not entirely sure we're going to get it. That's why I'm already positioning ahead of that final support that we have, which is this 1K.
That's fun. Thank you. That was very enlightening. As far as I mean, 4K obviously honestly sound ludicrous, right? It's like it's a humble 2x from current prices. But I'm guessing the
Yeah.
high time frame picture is some version of, I'm zoomed out on the weekly right now, and you can sort of tell that 1.5 ish is a high time frame range low. You can sort of tell that there's a lot of fucking congestion around this, 2.3, 2.6 area as a midpoint of sorts. And then there's an obvious sextuple top at around 4K, which is the top of the range. So best case scenario from a high time frame perspective is just a move from one area of extremity to the other, and you're assuming that if everything works out super amazingly, it'll just slice through the midpoint. Is that a fair attempt at
Yeah.
defense?
Yeah, I basically think like, and I think it's fair to be like it's not like it's fair to be bearish here, given you do have like a bunch of like resistances right here. It's just I'm kind of like, I think there's a chance that we break them, and if we break them, I think we teleport, and that would immediately kind of shift the regime, right? As in like we've gone down only ever since August, September 2025, right? And we've kind of like never made a higher high, never made any kind of sort of attempt to even get close to a high that we've had before. We didn't even get any close to any prior consolidation we had, right? We just had like straight dump, sideways, straight dump, tiny move up, but nothing really, not getting even close to prior consolidation, and then straight dump again. But that last dump didn't take us very far, and the bounce took us immediately back to the prior consolidation. So we're kind of like in that area where, like, if you're bearish, you'd want to be bearish. Like that's a nice resistance, like at 1.92K. But I think if that breaks, you're probably going to break all the other resistances in that vicinity as well. And I'm just kind of like, I would be hard pressed to find a good entry on ETH if we did that. Like, let's say in 3 or 4 weeks, we have a candle from 2K just straight up to 2.3, 2.4. I'm not entirely sure if I'd be happy chasing at 2.3, 2.4, because I feel like I need to get on the bullish trend. But if I already have a position, it's going to be easier for me to kind of trade around it. So that's kind of like what I'm doing here. And that's why I kind of like have the higher targets, because I feel like you break this resistance, which is the most obvious, most clear cut one at 2K. I think the other ones are much worse until we are all the way back at around 4K again. And then we're back in the monthly range where we've kind of been in since 2021. And then you can consider whether you want to be bearish at high, like the range high, or if you think this is finally the time where it breaks out. And then there would be much more upside, obviously, like much more in quote unquotes, because I think crypto's just at much higher prices than back in the day. I still remember when I bought like 84, 85 back in 2019. There was much more room to go there, right? Like a 10x wasn't too crazy. Whereas a 10x here would take ETH into outlandish valuations, I think. So I'm not expecting something like that, but there's still room to go.
Yeah, that's one of the sad shifts we've seen and also discussed as the market caps have increased, is that all-time high breaks used to be teleportation gates, and now they're levels that people sell into and sort of resistance points and inflection
Yep.
points to the downside, as we saw actually with ETH and Solana and others, which is quite unfortunate. On the ETH point, I think the sort of low to mid-high 2000s on ETH, just one of the worst trading areas ever, maybe. I mean,
Yeah.
if you just look at this area on the weekly, roughly the middle between, 1.5 ish and 4 ish, can you imagine how much money was lost in that chop? I mean, it is just horrendous, that entire trading area. I think this is the type of thing you show in textbooks when you in school when you tell kids not to diddle in the middle, or trade at at the point of control or at the mean or whatever, because that is just absolutely miserable. And otherwise, the moves from end to end have been pretty clean, right? Like comparatively, certainly compared to the middle. The moves from 1.5 to 4-ish are somewhat salvageable if you're already positioned from the other extreme. But if you're trying to sort of, as you mentioned, get on board around the range midpoint, you've had a horrific time. And I'm also speaking from personal experience. Like I've traded some of these consolidations, and they have not made life easy. On the strategy piece, I think the interesting kind of framing, which we've covered on the show before, is at least a lot of your trading can be categorized as sort of hedging the need to buy resistance breakouts, or to chase momentum or do whatever else, right? Like if you look at a normal trading system, it'll look like, okay, well, I measure momentum factor in these types of ways. And so, above this type of threshold, or when this type of signal fires, that's when I take my position. But you sort of take 2 or 3 steps back, essentially, from what I can understand, and argue that, the probability of a resistance break has increased. It hasn't happened yet, but if it happens, it'll go up a lot. And I really don't want to be in the position of having to chase post impulse. So the risk is I'm gonna position pre impulse at resistance, and then I either eat shit if I'm wrong, or it means that if a move actually materializes, I'm on board already, instead of being like, oh, the signal's here, the market's up 10, 15, 20%, let's get to work.
Yeah, I mean, the thing is, if I was more active in the markets, and I mean, this is obviously easy to say when you're not being active, but I would argue I probably would have bought lower. Like that's usually what I do. Like when stuff dumps, and I just buy when I feel like it's enough. Like that's usually my trading style, more so than anything else. But given I'm just like not fully locked in anymore, like this is just not a thing that I do anymore, where I sit like in front of the computer for 8, 10, 12, 14, 16 hours a day. I like like I look at a chart like 10, 15, 20 minutes a day. So I kind of have to just zoom out more and be fine with kind of like losing, like not getting the bottom entry, and then sometimes having to buy, or like at least like position into like what is lower time frame resistance, even though maybe there's gonna be a better entry at support, lower time frame support, but like I could see this dump towards 1.7, which is the support, and then bounce back, and I might not even notice until after the fact. It's just like sometimes I'm not in front of the computer for like 2 days, and then like cool, like I just missed it. And the other way around too, like I could see the start breaking out, and if I was non-stop in front of the computer, I could do something about it. But in this case, I could just see it break out, and then I noticed 12 hours later, after it's done like 3 or 4 full green side, like full-sized green candles, and I'm like, okay, fuck, what do I do now? So I just have to kind of adapt to my new way of just kind of like doing markets. And this is like spot stuff anyway, so it doesn't really matter too much to me. If I was trading leverage, I would struggle with this more, because buying into resistance is not necessarily my favorite activity.
I mean, we know that's a lie, right? You love buying resistance.
Oh,
if
I
the,
mean, yeah, if I'm like pretty sure it's gonna break, then I'm much more happy with buying the resistance rather than buying the teleport afterwards. In this case, like I kind of feel like it's like pretty good coin flip. I just like the upside a little bit better than the downside. But there's like, usually when I buy resistance, I'm pretty damn certain that it's gonna go. In this case, I'm not entirely sure. Sentiment sure is right, like it feels right, like everything is kind of set up for it. But we also have like a bunch of stuff that is really not in our favor. Like just generally like too many scams, too much stuff with the midterms, like politically, that might not go in crypto's favor, and all that kind of stuff, where I'm just like a little bit out of my depth, where I'm like, like it's harder to say now than it used to be.
yeah, I think that's pretty fair. God forbid we spend any more time on ETH, Don. I think it's pretty clear. The TLDR
Yeah.
is you're a lazy piece of shit. You don't care what happens. Nothing matters. You're cooler than all of us and have a life outside of the square box. And thanks for flexing on us. And nothing of
No.
value was derived. You don't care if it goes up. You don't care if it goes down. This isn't
Oh,
even how you
I would
trade.
love.
You can buy
I would love.
resistance, whatever. Nothing is real. So thanks for
You're
that
such a
section.
hater. You're such a hater. But I would like, just generally, like, I would love to see this go up, because not only would I make money, but also just generally I don't like the current sentiment that is going around, where like everyone's just very negative. And I mean, I get it. I can be the same way, but I don't necessarily think that's like any helpful, and I would like to see it go. And the move up would kind of make that go away.
The vibe shift candle is what you're referring
Yeah,
to.
please. Just give a vibe shift
Vibe
candle.
shift candle, yeah. Speaking of vibe shift candles, presumably much of what we said can be echoed for BTC.
Yeah.
65.6 is still the near term inflection point. We're still roughly sort of bandying around an area of monthly support. If it rugs, it'll look really bad, sub 60.
Yep.
I think, if you really zoom out, the bullish argument is basically sub 60k absorption, right? That's
Yeah.
where the wick ended up. Then we spent about a month trading below it, and now we're above it. I think if sub 60k absorption fails, then you start looking at like what 40 to
45.
50 or something, just volatility
Yeah.
expansion to the downside, right? Absent that, the vibe shift inflection point is 65.6, where it'll be the first break of resistance that we've had in quite a while, actually, right? Maybe since, depending on where you look, sort of June ish of 2025. Depending on how you look at market structure, you could always look at September as like the final rug pull all-time high breakout, but that was reversed and caused massive liquidations the very next week, and since then market structure has been in a downtrend. The interesting one was when we covered on the show extensively, the 72k breakout attempt that lasted a few weeks and then just got fully fucking engulfed by Iran and its proxies. So since that point, market structure has been decisively bearish. All of the support levels have been broken essentially. So 65.6k would be the first signal that some sort of reversal is intact, and that doesn't have to mean that it goes all the way to all-time high and we all celebrate, but it's at least a shift in what's been a super dominant trend since the top. And as always, it could end up the same way as 72k, right? That's a possibility. It breaks out, let's go, it's flipped, and then it just eats shit again. But at least the more compelling
I'd be surprised.
Yeah, well, I was going to argue that the slightly more compelling factor in this case is that it's taking place at support from a high time frame context instead of being formed at resistance or an area of resistance, which is what ATK was. But really, I think the only saving, like big picture, the theme has to be 60k absorption because there's nothing else left, right? The Sailor piece isn't really there. The regulatory clarity is on a pause. From a technical point of view, the trend and market structure and support resistance and all those technical proxies are pointing down below 65.6. So this has to fall into the bucket of volatility death/drift as a function of absorption below 60k. I mean, maybe I'm missing something, but I don't think there's any other framing that is super compelling at the moment. Everything else stacks up on the other side, like seasonality, competition for dollars with this big AI memory rally, correlation, like all those things are pointing against. So I think you kind of have to religiously hold on to 60k as the bullish case, even if the bullish case means can we stop going down instead of teleporting up.
Yeah, I kind of like the momentum trade above 65 a lot. Bitcoin is a little bit weaker than ETH, which is the first time in a long time that we've been able to say that, like even higher time frame. Like this weekly chart on Bitcoin looks, I think, objectively quite a bit worse than the one on Bitcoin on ETH. I don't know what you think about it, but like it looks a little bit worse. So I'm like on this one, I'm going to be happy to add to Bitcoin above 65. Like I'll try to play the breakout above 65 in this case, because I think at that point we do shift the vibes, and I think that could lead to a little bit of a run, even if it is not the bottom.
Do you have advice on the execution? Not financial advice, obviously. Perhaps wisdom to share or your experience in terms of taking those trades? Because I think that's a category that a lot of people sympathize with. They'll draw a level or an inflection point or a trigger point of some sort and then say, above this, I want this exposure, right? Which is basically what that framing is. But then when it comes to execution, and I've certainly had this before, especially early on, you make this wonderful plan and then you get punched in the face. No plan survives contact with the enemy. And so you think, 65.6, that's the trigger point. And then the market's trading at 67, let's say on an intraday basis. And it's just like you're a deer in headlights, right? Which time frame do I use? Do I wait for a pullback? Do I scale in? Should I limit chase? Should I use a market order? How should I build a position? Should it be one clip or many? Like all of those sort of questions start firing off if you don't have a clear system for basically formulating what a momentum trade looks like and how to build exposure. And we know you like to do things very simply. GUI click trader 2017 on a fucking Lenovo ThinkPad type of thing. So for anyone who sort of has a similar-ish looking framework for trading where they want to add on momentum above a certain level or below a certain level, in this case above, how do you, or at the very least, how do you execute, or at the very least, what are the definite things not to do and worst mistakes one can commit in that type of framework?
Yeah. So it depends on and I hate like every answer and every question is always answered by it depends, but it really depends on how bullish you are or how bearish you are. Like how strong is that setup that you're trying to trade into? So like how much conviction do you have? I think if you have like very, very high conviction that you want to be on board and your entry criteria is filled, and I usually try, like if I'm like, hey, I want to buy the breakout above 65.6, like a weekly close above there. I would usually try to find like an entry on the lower time frames a little bit earlier. And there's always risks associated with that, which is like you just don't get the confirmation on the higher time frame and you just trade the wick and like your signal never fired. So this the risk. The reward is obviously that you don't have to buy into the full green candle. Sometimes you get the early bits of it. In this case, for example, I think 64.6 ish on the daily time frame If we close anywhere above there, I would be looking for getting into the trade, as in like already before the weekly is even confirmed. And then if it does something I don't like, I might cut the position and then just do it again. But that's just kind of like it's a momentum trade on the daily time frame into the weekly that I think would break out, because we are kind of on the edge right now of breaking bearish. And if we come back up there, we'll be at the edge of breaking bullish, and I think that will be enough to break it out fully. Obviously not guaranteed, but I think if we run towards 64.6, any candle close above there is probably going to be enough confirmation for me. So once you're at that point and you're like, I want to be involved in that trade, and I have high certainty, I always kind of find it stupid to look for the exact perfect entry. Like you want action and you're very certain that it's going to go up or down, and then you're like, yeah, but I want to have it 0.5% lower or 0.5% higher. I find that quite stupid, because like you have your conviction for a reason. So like I think it's fine to just like market slam it. I I don't necessarily think you have to make it perfect. Now, if you have less conviction in the trade, making it perfect makes more sense, because then you're kind of like, okay, if I miss out on this trade, that's fine. I didn't have much conviction in it anyway. But it has to be like everything has to go perfect for me to get in the trade. So at that point, you can put limit orders at a place where you think you might get filled if you're lucky. It's something that um, a friend of ours, Salsa Tequila, like always puts nicely, like lucky entries, likely exits is what he says. And I really like that frame of mind. Like if you're not entirely certain, you look for the lucky entry, where you're like counting your blessings that you actually got it. For trades where I'm not so certain that I'm gonna wanna be in the trade. And yeah, then just depending on the conviction, just go from there basically. Either just chase it, be aggressive if you're super convicted, or be less aggressive if you have less conviction, and then set your invalidations and deal with whatever comes after.
Yeah, that's helpful. I think the piece that is useful to take away from an abstracted perspective is for those types of signals, if you're doing them on a purely technical basis, like, candles and levels, you can do some time frame front running, essentially, where if it's a
Yeah.
weekly time frame breakout, you can go down to the daily to get an early signal. If it's daily, you can go down to the 4 hour, etc. I think that
Yeah.
makes a ton of sense. I think the other one that helped me at the very least is thinking about it in terms of like the signal and signal strength instead of the specific price level, right? Like, let's say the breakout happens, that materially changes how you view the market from like a momentum signal perspective. And then if it really is as compelling as you made it out to be when you were planning the trade, then every moment that you don't have exposure to this signal, you need to be able to rationally justify, right? Because technically, if you
Yeah.
had zero exposure before the breakout and then it broke out and you still have zero exposure, then you're going to be hard pressed to explain why the signal mattered in the first place. Like, the only explanation is either the signal is garbage, in which case, fine, go review, or the signal isn't garbage, but then you're just kind of not following your own system, because you, by definition, have the same exposure as you had before the signal took place. So either the signal's garbage or you're a cunt, right? Like, which one is it?
Yeah.
And I think that made those types of trades, so you kind of have to grit your teeth a bit and pay up, a bit easier. I think in very, very practical terms, away from all this like signal pseudo-philosophical abstraction nonsense, getting away from the lower time frames for high time frame ideas, as generic as it sounds, is actually very helpful, especially if it's a strong breakout. It's up like 5, 7, 10% or something. If you then start going to the lower time frames for that, those moves will look fucking enormous. And some of these poorly trained trader instincts inside you will be like, oh, this is too big, don't chase. And, the next 1 minute opens red and you're like, I'll get a pullback. Like, that entire exercise is mental masturbation, at that point and serves you absolutely no good. And I think the interesting tension or even the paradox there is you actually want to see a big move through your level, right? Because that's evidence that there was a lot of positioning that has now been washed out and or strong buying, and it's basically what you want to, in the universe where you're right, you would want the breakout to be strong instead of weak. But what people do is they get scared of the big move because it looks big on, it looks particularly outsized on smaller time frames. But then if it were a small move, they'd be like, well, this doesn't look like a real breakout, I'm not so sure, etc. And so by definition, you've created a sort of untradeable set of conditions where you're paralyzed on either way. If the move is too small, you're like, I'm not so sure about this, maybe it's a deviation, whatever. If the move is too big, if you're glued to lower time frames, you're like, well, I can't buy this, I'm going to wait for it to pull back. And it's like, well, which one is it? And if it's neither, then you won't be able to trade at all. And, the entire idea was impossible to execute from the start, which is a huge loss. So for me at least, the time frame hacks definitely help. Avoiding the time frames, low time frames help a lot for, especially if it's a high time frame idea. And then sort of being self-critical about what you're doing in the moment, not in the trading mindset psychology bullshit way, but just in a sort of rigorous, I had this idea based on this signal, now the signal's here and my exposure is the same. Something is wrong. I either misinterpreted the signal or I misinterpreted on the position size, or I'm just not executing my system. And all of those, once you diagnose, are a bit, easier to fix than just being a deer in headlights. And I also completely agree on the time frame piece. Like when you have those types of momentum trades, there's a force that's pulling you and a force that's pushing you, right? The force that's pulling you is when you're less confident. You're kind of thinking with one eye to the escape hatch, right? Oh, what if I buy the top and it pulls back directly to the level? Or what if it is a failed breakout? And so you want to keep that part, that part of your brain is telling you not to slam it. And then the other part of your brain is oh my God, I've been waiting for this signal for the longest time. This is the high time frame regime shift. It's about to fucking slam. And every second that I don't have exposure, my family is going to be stuck in the permanent underclass eating Mr. Beast Feastables in the nuclear bunker or whatever. And I think optimizing for those is kind of a function of, obviously time frame, but also the magnitude of the trade. Like if you're treating every intraday garbage breakout as a do or die regime shift signal, then there are system sort of regime sensitivity issues there that you should fix, because by definition these things don't happen all too often. When they do happen, if you're trying to optimize on lower time frames, you're essentially saying that I'm willing to give up a 30% move for a 0.2% better entry, and you should actually draw what that looks like on the chart or map it out in P&L terms or whatever else. And it's also worth realizing that in most cases where people do this, and again, I've done this a shitload, right? I fucked up a lot of high time frames doing this. You're essentially saying that I'm willing to give up the entire move for a slight optimization to entry, or phrased more brutally, if I don't get the perfect entry on this, I would rather have zero exposure than not look like a sniper, And like, once you decompose it into those terms, it becomes very difficult to intellectually defend being so pedantic and frankly stupid about it, and your ability to grit your teeth and actually execute on the signal becomes a lot easier. And I think a lot of this, I don't know if you agree, that's ultimately what it comes down to. It's a sort of emotional reaction to the market being up and you not being a part of it despite being glued to the chart. And there's an ego element there where you're like, I had an idea that it was going to go up, but now it's up so much, and if I buy here, all of my friends are going to think I'm just some momentum monkey buying the top of a green candle, and I will look extra stupid if it then goes down and ends up being a failed breakdown. So I honestly think a lot of this momentum trading hesitation, especially in discretionary traders, comes from like either poor context on the actual idea they're trying to action, or it's like an emotional response to buying high, essentially, which a lot of trader instincts stop you from doing. So being able to decompose that response and turning it into something a little bit, even if it's not systematic, something a bit more intellectually honest. You kind of zoom out and you're like, what the fuck am I doing here? I want a 0.1% better entry, and if I don't get it, I'm going to have zero exposure to this high time frame idea that I've been waiting for like months. I think once you put it in those more palatable human terms, the whole job becomes a lot easier, in my experience, at the very least.
Yeah, well said. I fully agree with everything you said.
Nice. I should hear that more often on this show. Um, should we go over the investable assets in this fantastic industry we're in? I mean, hype has. We didn't spend too long here because I think realistically, as much as we want to talk about the investable assets, the big push, apart from a couple, across the board will come from however this volatility drift resolves in BTC and ETH, right?
Yeah.
That's going to be the main thing, which is why we spend the most time there. Hype is held up at 54. We sort of talked about that being in the high time frame range low. It took a couple stabs. It's a bit like BTC in that regard. Obviously, not if you look at hype BTC, but the technical framing is the same, where you have a level which is a high time frame support. You can call it 52, 53, whatever you want. It's taken a couple of stabs below it, and thus far seems to be absorbing those sellers. And you kind of need that to be the case, because anything below that gets into the 40s, for example, and there's a bit of a gap there. And I think that's the TLDR on the hype. I still see that, especially relative to other altcoins. I still see this as a decent bit of relative strength, and I think it's useful / telling that it's taken a few stabs sub 50, and that seems to be where it wants to build its high time frame range low. And then if it nukes from there and you get into the 40s, at least for me, that's like a value punt, where you're like, okay, this is like a 6k break, not as dramatic, but this is the high time frame range break. Maybe if it goes, maybe it expands and goes lower than what I'm comfortable with knife catching, but like, I'm gonna give this thing a go because it's one of 0.5 investable assets in our asset class universe. What do you think of this?
Yeah, I think if it breaks like 41-ish, it's probably really nice. Because this is quite an important level, and I think that would take us like stab quite low. But I like that'd be like a lucky entry, I think, as in like you'd probably be trading at 50 quite quickly afterwards again. And yeah, I fully agree with you. It's just like Bitcoin. It's basically like everything, and you will see this like if you go through the charts, everything is kind of at like do or die levels. And Bitcoin is very much at the same, like doing the same. Like the monthly is at a do or die level, and we're kind of just sitting on top of it. And there's a bunch of charts where you're kind of like exactly at an inflection point. ETH, like we talked about early in the show, is exactly at that point where the strongest resistance is. You have hype at the strongest support, right? And then you have Solana, same story, kind of like at that point where it would at least shift weekly momentum, which would be quite huge. If it breaks like 81, it's at 75. So that's quite close by. And you will see this on every single chart. Like they're all at levels like this, which makes me think that we're gonna get the move relatively soon. And relatively soon on weekly timeframes means that doesn't mean like it's today or tomorrow or the day after, but like in the next 3-4 weekly candles, as in like next month, we're probably gonna see this resolve one way or the other. It's a little bit coin flippy right now.
Yeah, I agree on the coin flippy piece. But that also is what adds urgency to the momentum argument, right? Like volatility is so fucking constrained at the moment that when you get a decent chunky signal that the regime is shifting, you should probably like adjust whatever mean reversion mindset you're in and whatever daily ranges you're used to and all the stuff we spoke about last week. Essentially, if you haven't checked that episode out, it's a bit of a different one, but thank you for all the comments and feedback. And there's a lot of stuff we referenced throughout our episodes now that are derived from those trading mistakes and principles, etc. But that was one of them, right? Essentially, you get too complacent and used to a certain range, a certain volatility, and you adjust your size accordingly and your invalidations and so forth, and then you get doubly fucked because you get caught with your pants down when the regime changes, which is actually okay. It's the cost of doing business and a sort of known risk, which hopefully you're sizing for in advance. But I think the second order effect, and I've certainly had this, Take a shot every time I mention a common trading fuck up and say I've certainly had this. Like I have done a lot wrong. But once the regime does shift, you're too late to adjust, not in the trade you were in, but also for your future trades, right? You're like, oh, this is the classic 6K one, which I actually got right for a change. But I was like, guys, this is actually a pretty big deal, and volatility was so small, and now it's just expanded. You should probably expect it to stay that way and continue to expand for some time. And if not, you just buy above 6K. Not great. Like that's the setup essentially, and you get rid of all the business underneath. Naturally, I didn't super follow that myself. I was still knife catching 6K, sub 6K to a decent amount, but thankfully not as early as everyone else. Like you remember the timeline at that point, right? People were like, oh, it's like a quick old dipperoni to 5.5, and then we'll be back at 6 tomorrow. And narrator, that is not what happened.
Nope.
So whatever way this coin flip expands, I don't know about you, but I'm going to put a decent amount of weight behind that signal, and that will reflect in my positioning, hopefully. If I manage to get a break from the permanent corporate underclass, Don, you know how things are these days. Hype we covered. Solana is another one that's one we gave some attention to, but at this point, I don't think it's particular. I still think the guidance actually holds. Where again, if we're going through the theme of a lot of these being do or die at these high time frame levels, this 81 weekly resistance, I think, is still the best proxy for that type of idea. Everything else is the same thing. You have a weekly resistance above you, which is the early momentum signal, and then all the stuff below you makes you very sad. So you kind of hope that it gets absorbed and goes up, and if not, then you go on a deep sea diving expedition if volatility expands the other way.
Yep, fully agree. I mean, and that's like the story everywhere. Zcash, like that's another one of the stronger ones. Like Zcash, I actually find quite interesting. Like if you put it on the monthly time frame, and we've talked about this level before, like 477, like 480-ish, that like high from December 2017. We've kind of consolidated around it a bunch, and it's been stronger than you would expect, given the significance of a level like this, I think. So the fact that it's not moving from here is like a good sign, but also you're still at kind of like resistance. So it's hard to take action. But like if Bitcoin breaks the upside, I think that's probably gonna go as well. It's gonna stay one of the leaders, I guess. But yeah, it's just something of note where it's like whenever you have consolidation around like a high time frame resistance, rather than getting actually rejected from it, that level loses more and more relevance as time goes on, and I trust it less and less. And at some point, you'd expect it to break to the upside. So if it hangs around here for a couple more months, you'd expect it to at least take a new stab at the highs. Like even if it goes lower afterwards, you'd expect to kind of like run the highs and then pull back. That would be the most bearish outcome, I think. Like you have like a high time frame level like we have here, and then you kind of double towards like 800 and then pull back. And I think then I'd be like, okay, this run for Zcash is entirely done. Right now it's kind of like it's at high time frame resistance, but it's not doing much. So it's kind of like it's a wash of sorts, which is quite impressive considering most other altcoins are like very much not a wash, but very bearish. And this one's like holding up fine so far.
Yeah, it's washing out this high time frame resistance level, right? Like every touch and weekly close above and then close below, like gradually it starts to lose relevance. Because you can tell that market participants care less and less. So if it manages to stay up there, then it's a pretty good signal. But also like the weekly, like, can you imagine trading this thing on the week, even on the weekly time frame?
Yeah,
it's been so noisy as a direct function of that. But in terms of relative strength and kind of proximity to all-time highs, I completely agree. There's also Pump, which has been one of the beneficiaries of this on-chain renaissance that you've been actively participating in, that was just downward death drift for quite a while. But this is sort of definitionally one of the better looking altcoins, right?
Yeah.
Because it has broken weekly time frame market structure pretty clearly, and actually does have a decent chunk of momentum. Even if you look at sort of the size of these weekly moves, this does not look like most altcoins. And so I think that's an interesting one. If you have interest in I think this falls into two buckets, right? Like one is like the revenue meta meme, and then the other is kind of on-chain finance, social trading, all of that stuff. And Pump is, I guess, the best token we have for that, because it both directly accrues revenue and still, I think, the biggest platform for that part of the industry. This is not a bad chart, dude, given the altcoin landscape.
I agree. Like, I mean, I don't like anything that they're doing. But like, this is probably going to be one of the stronger ones. If the market goes up from here, like if the coin flip resolves to the upside, this is positioned really well. Which I hate to say, but like I look at the chart and it's quite like that's a good chart. And narrative wise, I think it's quite well positioned. It also dumped a bunch from the start, basically. So yeah, I hate to say it, but it's probably one of the better bets.
Yeah.
Yeah.
Through gritted teeth, as I can tell, for
Yep.
understandable reasons. And then there's Lighter as well, LIT. There's been some funny back and forth about, Lighter versus Hyperliquid and all of that stuff. But I think this also falls into one of the very few investable themes, which is perp dexes making real revenue with a token that isn't just governance theater, which is not a bad place to be. And yeah, I mean, it's obviously pulled back a bit recently, but again, go through the top 50, 100 altcoins and look at proximity to lows and how they've been trading versus the tiny handful of investable coins that aren't at zero that we've discussed and where the industry is sort of converging around. And there's an enormous difference there.
Yep.
I mean, is that kind of it? Like, realistically, what we're talking, Hype, we're talking Zcash, Solana, maybe, Lighter. What are we missing? I mean, maybe the comments can tell us, but
I mean, there's a few that don't look as bad as they could.
Sure.
But not that many. Like Link doesn't
Link
look as
up,
terrible. Like I actually like that chart.
But again, proximity to highs, right? If we care about that type of thing.
Yeah.
Like, yeah. I mean, it's sort of flipped its equivalent $8.4 floor, but I just kind of zoom out and look at this thing, man, and think, fuck. Backbone of DeFi, but I don't think they figured out the value accrual piece for this. It's also too old. Do you know what I mean? As dumb as that sounds, that kind of stuff does start to matter. But I think the TLDR is that the altcoin landscape remains very thin for now, which at least has its own kind of benefit, where you're not having to pass through a watch list of like 200 things and split it up by theme and sort of measuring them against each other, etc. There are like 5 to 10 coins that you have to follow, and that's about it. So at least your attention bandwidth isn't being particularly constrained by this stuff.
Yeah, I mean, it's just crypto's just been very uninteresting. Basically, ever since the crypto presidency started, which is funny in hindsight, kind of obvious in hindsight too, right? Like we've had this so many times where it's like, oh yeah, now we're gonna go up. Like that's like finally we've achieved this and that, and then it's like, okay, we're at zero. Fuck, how did that happen? Just because like whenever your wildest wishes come true, it's kind of like, what else do you wish for? And that's kind of like what we've gone through in the last year. Also, just like fully rug pulled on pretty much everything that exists, on the good stuff, on the bad stuff. It's just the bad stuff is not really recovering. or just mercilessly rotating from one thing to the other and just bleeding each other dry. It's just the crypto landscape right now.
I know it
And
was a
then
crypto presidency of sorts, right? Like the president made a lot of money from crypto.
yes.
Is that not what was meant by crypto presidency? Maybe you didn't get the memo, or it's an English translation thing.
Yeah, it's just like it's kind of funny because like the critics, like the people with derangement syndrome, were kind of like saying this is exactly what was going to happen. And yeah, it turns out that's exactly what happened, just massive extraction. Um, and sadly, like not that much on the regulatory side. Like there could have been so much more, in my opinion.
Yeah,
We're kind of
it's been
stranded on
okay,
that still.
right? Like sort of Genius Act ish, and
Yeah.
then Clarity Act, if it passes, will be pretty decent. But lo and behold, ethics is one of the big holdups for that one. Who would have thought? Impossible, unfathomable. And also, I think, as a matter of record, people who accuse you in particular of having Trump derangement syndrome need to get their facts straight, because the amount of money you've actually given to the Trump enterprise via his multiple NFTs and other crypto vehicles is actually quite high. You might be the biggest individual donor in all of Germany, as far as I'm aware. So
Yeah, it is true. I cannot deny it. I'll go to jail for it one day. Like if I stayed in Germany, that might have cost me my freedom, being like having supported Trump in one of his NFT
yeah,
endeavors.
this is the new narrative, right? You moved to New Zealand because you gave Trump a bunch of money via Polygon NFTs, and now you're worried that the sort of political wheel is going to spin back against
Yeah,
him, essentially, and by proxy
you got
against
a
you.
hedge, bro.
Yeah,
You got a hedge.
classic New Zealand hedge for buying the wrong Polygon NFTs.
Yeah. Oh, dude, that would have been such a good trade. Like I was up so much, and then he was like, "I'm just gonna launch." Like
Did you round
he
trip, or
just
did you get
launched.
diluted, or both?
So like I bought it, it went up a bunch. And then the like just generally was really well positioned to do really well. Um, and then he just launched another one. Um, and I just like the moment he announced that, I was at the table, and I just dumped, and I think I lost. Like I round tripped everything, and I think I lost like in total like 30% or something. On what I bought, maybe even more, maybe 40%. Um, but yeah, that was just like a straight up nuke, because it was obvious like that was gonna go down at that point. And then that kind of like made it obvious like how he would run the crypto thing. That's why I was so certain like when Trump launched, that would just go to zero, because I knew if it was successful, he'd just do another one. Which he did, Melania, right? And then they made so much money with that that there was like the rumors of the Baron coin as well. I don't know if you remember that one. I don't know if he was actively involved in it or not, but that rug pulled quite quickly as well. And then you kind of like, that was kind of obvious given his past crypto um yeah, his past crypto experiences, where he's just like, yeah, I've launched an NFT and I made a little bit of money, so let me launch another one. And then he made a little bit of money on that one as well, less than on the first one, but then he launched the third one, I think. Maybe even a fourth, I don't remember. But he definitely launched two. I think he launched the third one. And then I just didn't keep up keep up with it anymore. But that's kind of like been the story, like just max extraction. But yeah, I did buy a bunch of Trump NFTs, and that went to zero at the end of the day.
Listen, at least he's nothing if not consistent, right?
Dude,
With his
but dude,
approach to crypto.
imagine, like I bought these NFTs, and imagine he never launched another one, how much I would have made on that trade, because he was like very far away from like his second presidency at that point, right? Like that's a while ago. So like if he didn't make another one, I think that collection would have gone up so much. But given he's like just max extracted, and the funny thing is like he would have made more money if he didn't max extract, as in like just launched over and over and over again. But yeah, imagine that, like his second presidency, and you hold his NFT. Would have been quite fun, but it's what it is.
So the true cause of your well-established Trump derangement syndrome is that he cost you money. So it's like the classic thing, right? You don't
Yeah,
actually care about the politics or the policy or the corruption or anything else. It's just the fact that
yeah, or
you
the
got
Epstein
diluted.
stuff.
Yeah.
No. Big fan of all of
Yeah,
that.
yeah, for sure. Foreign policy,
Yeah,
very popular at the moment, and everything
yeah.
else. Um,
No, it's none of that. It's just that I lost
it's
money.
the NFTs. I mean, that makes a lot more sense than your political posturing. So it's nice that we can put a close on this Trump derangement syndrome theme, and we know that you're just salty that you lost money, bro.
Dude,
Um,
I tweeted when I bought it. I was like, because that was like during like some of the heaviest criticism that I got for like criticizing Trump. And then I tweeted like, hey, like if you wanna accuse me of derangement syndrome, buy more NFTs than I do. Like, because otherwise you're the one that has derangement syndrome, which was terrible financial advice um at the end of the day, but it's what it is.
that's great. Well, it's fine. When you get your NFT redemption ticket to Mar-a-Lago, you can go and tell him how you feel. Um, I'm sure
Oh.
I'm sure that's going to happen. Um, this sort of reminds me of, and we can wrap up on this, a broader theme that's going on at the moment, which is coming primarily from newer generations of traders. But the premise is that sort of to some extent trading is the new esports, but like a even wider version of that, where trading and publicly trading and copy trading is traders are going to become celebrities essentially.
Oh yeah,
And
yeah.
everyone is going to be trading, and it's just going to be you've got like rappers and musicians, etc., and then you've got traders there as well. um, personally do not find that particularly compelling, and I think it's a bad idea, and that it's likely not going to work out that way for a few reasons. I mean, there's a big laundry list of reasons of why I think that framing falls apart. But if we sort of consider the current shape, when you have any type of fleeting edge or low time frame edge or sensitive edge, you have every incentive in the world not to share it, right? Because the more you share it and the more people act on it, it'll either just get arbed away immediately, or it will become less effective, or you accelerate the rate of decay, or whatever else. It's just bad practice to share out that type of stuff in general. And people who have true edges of that nature, and there are different types of edges, right? But those specific ones, like, you find a contract that rebalances in a very clumsy type of way, or a specific counterparty that's active in the books doing the same thing that's price insensitive, and you can sort of ride their coattails. It could be product driven or exchange driven, instrument driven, a specific market maker who's bad at updating their quotes, like all of those types of things. You're not incentivized. In fact, you're actively disincentivized to share those types of things. Forgetting that category, when it comes to sort of more public market stuff, most people don't have an edge in like large liquid public markets, and most of the people that they're trying to onboard also aren't interested in those, because the returns are generally more modest. And so that as a category, like I'm a BTC trading influencer. I just don't think people care enough, unless you put enough leverage into it, and then you become this like day trader phenomenon. But the net impact, I mean, most people kind of don't stick around and have an edge in that sense. At least it comes and goes and varies by regime, etc., etc. And then the people copy trading them are just going to get led to the slaughter, I think. Especially when you add leverage into the equation, the risk management and trade management, all the stuff that's harder to socialize, let alone the incentive to not socialize it. That type of stuff makes or breaks that type of trading. And just if we sort of zoom out, by definition, for society, most people shouldn't be trading, right? Like most people lose money trading. Most trading venues, and like the tools that average people have access to, they will lose money simply because of like not even lack of edge, but just a sort of fee drift alone, right? Transaction costs. When you trade, that costs you money. And at the very least, you need to cover your costs before we can start having like Edge by definition has to cover your costs. Most retail accounts just trade down because they don't have an edge. Plus, the trading costs sort of create this fee drift, essentially. So on both ends of the spectrum, for the people who are supposedly being the celebrities, all the way to the people supposedly consuming the content, I think it's a bit of a bad deal. Not to mention I think the incentives end up very perverted, and you get perverse incentives for the people trying to be these celebrities, because you have a huge incentive to move markets, and you have a huge incentive to participate in the types of markets where you have a lot of market impact and where you have more asymmetry. And the most obvious example of that is people sort of farming their own copy traders, right, on Pump.fun, FOMO, etc. So I'm not really sure what the end state of this looks like. And if it is illiquid market, small cap type of things, we already have, I don't know, decades of precedent for this, of like micro cap newsletter pump and dumpers. They're not becoming celebrities anytime soon. And then the argument that like on-chain changes this because of social-fi, again, I think the incentives are super perverse to just like move markets, farm your copy traders, bundle, insider trade, etc. And at a certain point, your so-called followers, they might think you're cool if you have a lot of money, but they're not making any money. And then you're not really a trading celebrity. You're just kind of a guy with an Instagram account who has a lot of money. And then I think you actually fall into the category of lifestyle influencer via extraction, where you're not known for your trading or the utility you provide in that context. Is just, through adverse means, you've made money trading, and now you post fucking lifestyle clips and watches and everything else. But to me, you're a lifestyle influencer at that point, with a mysterious source of income. I don't think the trading piece has anything to do with it. And then, if you can talk about big, liquid, public markets, etc., obviously the edge decay thing applies. And also, most of these people end up trading at like big funds or professional trading firms are doing other things, and those don't generalize or abstract particularly well to the average person browsing Instagram. So I don't really know what the exact thesis is. Maybe we can bring Ansem on the show, your best friend, and he can explain sort of what we're missing. But to me, even trying to be maximally charitable, the best case version of this, which isn't particularly a good case, is that because of the social mediaification of trading and the on-chain piece, which makes social trading a lot lower friction, easier to onboard, easier to follow, and so forth, the best case version of something like this, and I say best, not in the ordinary use of that term, the best case version is you have a bunch of people who become social media lifestyle influencers / celebrities, not because of their trading, but as a function of the type of trading that they did, in order to get there in the first place. So day to day, you'll be watching fucking lifestyle clips and podcast clips and wisdom, etc. But they're not trading influencers in the trading sense, because that stuff doesn't generalize well or abstract well. And you just end up having it's basically just like a rich dude with a big account at that point. What am I missing? Like, I'm definitely missing something, because I'm sort of thinking about this on the spot and haven't really thought about it enough. One analogy I've seen is like, oh, well, and this was on, I think, Thread Guy's stream, which I popped into for like 10 minutes. It was quite fun. It's a nice community. People shoot the shit in there. I disagree with a lot of his takes. I think others are sort of naive. Others are slightly more interesting. There's a decent range there, but it's sort of nice to see how other market participants think. And he was talking about how what was it? It's like Ansem is to on-chain what Trump is to public markets. And it's like, even if I agree with the analogy, let's say we grant the analogy, I don't actually think that's a good thing. Like, what Trump is doing to public markets, I don't think should be like an end state that is desirable in and of itself, with his like Iran taco end of week market open nonsense. Like, I don't think that should be the function of public markets. Especially like equity indices, which hold a ton of normal people's wealth and pension funds and all of that type of stuff. So I would really love for someone to map out what this end state of trading celebrity social-fi looks like, because I think the incentives are super perverse, and the best case is you just get rich dudes from picking off their followers, posting lifestyle slop after farming their copy traders. Maybe that's too cynical, but I've been droning on for ages. What do you think?
Yeah, no, I mean, I think that's pretty much it. I generally like whenever you have like an account that has a bunch of following, tweet about stuff that they can easily move with their following. Um, Most of the time, that's like I would say 99% of the time, that's because they want to make money off their following. It's not because they're being charitable and like getting their following in there. It's just like it's like a pump and dump of sorts. Um, so yeah, I just think that's basically happening a bunch. It's not like this is the first time we've had all of these arguments come in. We've had the same thing happen with the celebrity meta like a year or two ago or whenever that was, um, where the same arguments popped up that that was like a good thing for everyone, and then those coins went down 99% and crypto went into some of the worst period of trading that it's had. Um, Altcoins went down much more than typical, or like much more and much longer, and seem like most of these just don't will not come back. So like it's just like it's a way to frame nefarious actions as something good for everyone to save face, nothing else. I think that's kind of like how I look at it. It's like it's a good way to extract a bunch of money, um, and it's working because people are very naive, but also because like a lot of people look at this and they're like, yeah, this is bullshit. But if I'm one of the first ones to buy it, there's going to be a bunch of people that are dumb enough to believe in this. And then it goes up. And then a bunch more people actually start believing in it because price goes up. It's just kind of like how this whole thing works. Like the early guys are just like, yeah, they're usually a little bit smarter and they're like, yeah, this is bullshit, but whatever. It's gonna make me money. And then the later on you go, as in like the further down the daisy chain you go, it's kind of like, yeah, everyone gets dumber and dumber. And then at some point you get like someone that doesn't know what they're doing, that's just buying the top, and that's how it ends. And that person is gonna zero out, and that's just gonna happen at some point. It's just a question of when, not if. And I think even the people that kind of promote this stuff would agree. Like if you ask them privately, like where they think that this thing is gonna end up, because that's just been the history of every single useless coin like that ever. They just argue like that that's not a bad thing. Like the volatility they introduced is like a good thing because it made millionaires or whatever. But that $1 million came from somewhere, right? Like this is not like you're creating wealth. It's like you're redistributing it. And the people that are making it usually are the people on the inside, largely. There's obviously a few people that are not on the inside that are also making money, but that's the minority. And so you have like a bunch of grifting assholes basically making a lot of money. You have a bunch of like a few smarter traders that make a little bit of money, and then you have like the unfortunate rest that just pays for everyone else. And I hate that argument of, yeah, we're creating millionaires. It's like, nah, man, you're taking money from a lot of smaller guys and giving it to very few bigger guys, and then a few of these smaller guys might keep some of the money that they made, but most of them will lose everything. And that's just a fucked up thing to do in my eyes. But that's the major beef that I have with it. It's like Robin Hood in reverse, right? Like take from the poor, as in from the idiots down the line that buy the top, and those are usually like the smaller guys. And give it to the rich, and that's kind of what you're facilitating. And I would be fine with it if it wasn't so insider driven, where I'm like, okay, this is just a trade. Like everyone has fair odds, and some people are just smarter than others, and it's a game after all. Like the trading game is just like that, a game, and you were just smarter. But given there's so many insiders that profit the most, it's not even a fair game, and the worst people get the largest share of it, which just makes it particularly unappetizing to me. Like I just hate that. So yeah, that's that space for me in
Yeah.
my eyes. That's why I'm so negative about it.
I mean, the adverse selection element is just so absolutely insane in that paradigm, um, as a function of insider information, which then translates into speed in edge terms, right?
Yeah.
Um, and then I think the other piece is, as a doomery, look, counter argument is we're two washed up fucking boomers, right? You spend an hour a day on your screen with a 2017 watch list and a few lines. I'm a washed up LARP who just does breakout stuff now and has a real fucking job and doesn't know what he's talking about, and that this is the actual new paradigm. Maybe, right? But I think it's important to ground some of this stuff in the fact that we aren't just speculating on how it could be. Because this happens on chain, you can actually just fucking look at the data, right? You can look at how many people have a realized P&L of like over 10k, over 1k, over 5k, over 10k, etc., and what those average holding times are. Like there are Dune dashboards which track this type of thing specifically. Maybe I can bring it up for next week's show. This isn't like a speculative risk vector where, if the worst case manifests, this is what the payoff shape and the distribution will look like. We're sort of talking about reality here with verifiable on-chain public information. And then to the social elements, I just don't think trading is this is where I could be boomerish. I just don't think trading is the type of thing that should be super social and public facing and celebrity facing and getting average people, your normies involved. And to the extent that they do, I just don't see it. Like in slightly more useful terms, we have to bear in mind that social fi has been tried many times before in many different forms using average traders and celebrities and leaderboards and whatever else. And I think it's fair to say that every single instance of social fi has failed, right? To some extent, like Frentech and Kaito, and other instances I'm definitely missing. So, like, the preponderance of evidence suggests that social fi is either very hard to do or is structurally set up to fail. And I think the more social fi instances, as a movement or a theme, more so than a single project, the more that keeps failing, the stronger you have to adjust your sort of priors to maybe as a category, this thing is not supposed to be this big in the first place. And so you have two things acting against this thesis. The first is like the real world P&L distribution of this type of trading. And then the second is the fact that it's been tried so many times in so many different forms and it keeps breaking, which I think would indicate there's some sort of structural deficit there, as opposed to, we just need like the right team or the right person to come and solve it. But yeah, that's my take there. I certainly, like I don't partake in celebrity culture in general, but I think if you're gonna sort of boost anyone to that level, people that make things and discover things, it doesn't have to be scientific. Like I think musicians and artists, etc., and actors to an extent, if they didn't try to proselytize too hard politically, they have a role in that type of paradigm. But if we start injecting that with unrelatable traders who like caught a runner with their mates and made a bunch of money and like that's the person now, I kind of personally find it unappealing. And I think for the average person it's going to be like both boring and unrelatable, unless we again cross the chasm and there's some sort of big paradigm shift. And I guess this would be the argument, right? It's like hyper gamblification, where the entire narrative shifts from, you listen to music and you go to art exhibitions and museums and you watch TV shows. If everything turns into gambling, like, all you do is watch Kolshi, Polymarket, and Stake Casino TV, and everyone is gambling, and all jobs are gambling, and just like everything is gambling, then in that type of paradigm, I can see this becoming a thing where the natural extension of that is that traders who are on chain and have this social profile, etc., slot nicely into this hyper gambling paradigm where essentially all of society has been restructured around speculation. But I think if that happens, we have much
we're
larger,
fucked at that point.
like, it's over at that point, right? Like the empire is dead. And
that's generally how I think about it. Like when you just look at look at it very simply and you're like, what good does it do? The answer is nothing. Like it just does harm. I don't see any good that it does. It's not like you're trading like a commodity to facilitate like the best kind of like a accurate price and like a fairly priced thing, and you're kind of like making the market more liquid. You're just taking part in a scam, and like in an extraction event, and you might win, you might lose, but that's kind of what you're doing, which is just like what are you actually doing with your life? And it's fair enough. Like if you told me like that this was a thing like 15 years ago, and I was like, can I make money with it? And you would have said yes. Maybe I would have taken part in it as well. But for me, like as someone that is a little bit older now, this is just against everything that I think. Like you already have to kind of like ignore a lot of the moral questions, like when you're trading. Um, but like at least it's not like you're not doing something obviously harmful. But in this case, it's just like, okay, you're just actively taking part in making the world a much worse place. And I think that's just not something that I want to be spending my time in. And if people do and they need the money that badly, fair enough, you do you. It's not like I'm telling people not to. I'm just like, for me, that is not even a consideration worth taking. Like I would never put a Donald coin out there. Uh, like, and if I do, like, that's not me. There's like, it's just no way, and I don't understand why anyone would ever do such a thing that is not completely desperate for money and needs it to survive.
Yeah, I mean, we sound like two grouchy old boomers, and we are to some extent. But if society really turns into this hyper gamblification, everything is based on speculation, speculators are the modern day celebrities, and so on and so forth. Also, like, just to be clear, that is like, there is some precedent to this in a way that doesn't encourage the world to be insane. Like, everyone knows who Warren Buffett is, right? And everyone knows who Paul Tudor Jones is, or at least like more people know. But like, if you look at like the more Warren Buffetts in the world, and like there is a class of so-called trading celebrities, but their job isn't being a celebrity. And society cares far less about them than other things. But in any case, if we do transition to that type of model where your favorite on-chain guy is showing up to Conan or whatever late night talk show, etc. If you think you've seen grouchy old boomer now, it's going to get 1,000 times worse. I'm just going to be that old man screaming at the cloud meme, being like, back in my day, we cared about adverse selection and expected value, and like you had to trade in public liquid markets to make money, and you had to have an edge, and so on and so forth. And I can see myself really having a psychotic break with reality at that point. But not to spend too long here. I think TLDR on social fi stuff, TBD. But I think the incentive structure, the perverse nature of it, and also the economic reality of like how these instruments are traded, how most people trade, whether they should be trading in the first place, especially if the goal is to onboard a trillion normies. It's like, yeah, onboard a trillion normies to your fucking bundle, so you can make a bunch of
Yeah.
money and disappear forever. Like, of course you'd be advocating for that. That I can understand, but for now, at least, you can consider me not sold on the premise. I mean, for those listening, if you want us to bring someone on to chat to us about this, let us know in the comments. Like, I think we're very much capable of rational discussion, right? Back in the day, we used to have a bunch of guests come on the show. Mostly our friends didn't disagree that much, but we are capable of talking to people. So if that's an episode that you want to see / care about, let us know in the comments. But for now, I think we're done. Let's see if we get a weekly move that changes something, anything, by next week's episode. Hope you all have a wonderful weekend, and as always, thank you to Kraken Pro for supporting the show. If you want to keep the episodes coming, support us by signing up via the link in the description and the pinned comment, and we'll see you next week.
Bye bye.